Good afternoon, everybody. Hello, Chris. Hello, everyone. Good afternoon and welcome to AIST's end of financial year lunch, part of our Thought Leadership series. Today's lunch is entitled Trump, Brexit and More. When we decided on that title, it was a while ago because there's been a lot more. There's been Macron, there's been the UK election, and I'm sure that our facilitator for today, Gerard Noonan, will take the speakers through their paces in relation to all the things that have happened since Trump and Brexit. I'd like to begin by acknowledging the traditional owners and the custodians of the land on which we meet, the Gadigal people of the Eora Nation, and I pay my respects to elders past, present and future. I'd like to thank our industry partners who today are supporting our luncheon, so Parametric, State Street and Vanguard. Thank you very much for your continued support of AIST's luncheon series. It allows us to bring people together and to discuss very important topics. Today's speakers will be thanked for their contribution with a donation to AIST's charity partner, which is First Nations Foundation. First Nations Foundation specialise in providing financial literacy training to Aboriginal and Torres Strait Islander people. We'd like you to join in our Twitter conversation today by using the hashtag AISTLunch, and there should be details about that on your tables just in case you forget. Just a couple of things I'd like to say in relation to developments at AIST. Today we launched our draft guidance on RG97. So a very exciting topic, I know, but incredibly important. I know it's something that the industry has been waiting for. AIST has worked incredibly hard together with Nathan Hodge on producing this draft guidance. I say draft because we are still waiting for the resolution of some final matters. So there is an industry working group that is working on finalising a number of small things, well, not so small, I guess, in terms of their implication, and also waiting on ASIC to clarify a few matters. However, because the deadline is fast approaching for the implementation of RG97, AIST has decided to put in its current form that guidance up on our website, so it was launched this morning. So I encourage all of you with an interest in that to go and have a look. And share it with your teams. The other thing is that our AIST governance code is also now finalised and also up and available on our website. So the AIST governance code, which is accompanied by a guidance document, is available for voluntary rollout by our members from the 1st of July of this year. We would encourage all of our members to have a look and have a go at doing the reporting against the 21 requirements that are espoused in the guide, in the code itself. And then we will be moving to a mandatory compliance regime with our governance code from the 1st of July 2018. Anyway, anyone that wants to come and see me about any of those things, you're welcome to do so over lunch. Our main courses are now going to be served, and then our MC for the day, Gerard Noonan, a director on the AIST board and chair of Media Super, will come up and facilitate our session today. Enjoy your lunch.
Thank you. Gerard Noonan is my name. I'm as Eva mentioned, I'm the chair of Media Super. I'm also on the board of AIST. I'm also on the board of The New Daily, and I'm a former journalist, which is probably why I'm here to be the MC for this part of the session. We're going to invite our speakers up in just a moment. And the way we will work things today, we're going to be all over at the, from your point of view, the right-hand side of the room, and we're going to do it in a format which is, broadly speaking, I'll ask a question of each of the speakers, and then I'll be reliant on you all to continue the Q&A process. So I'll be throwing to the audience after each of our speakers has had an opportunity to respond to at least one question. Now, the order of speaking will be in the following way, and I'll introduce our three speakers to the podium or to the what do we call it over there? Desk. That'll be close. In that order. So first of all, I'd like to invite Aidan Gayson, or as he reminds me, because he has a Dutch background, it should be Gayson. Aidan is the Head of Investment Strategy Group for Vanguard Investments Australia. Aidan has had an interesting career. He joined Vanguard in April 2015, but before that he spent over a dozen years working with Jana Investment Advisors, and Jana would be well known to many in this room. Aidan holds a bachelor degree in economics and law from Swinburne University in Melbourne and a graduate diploma in applied finance. So Aidan's going to kick off the answers, but he's going to be joined by two others. So the second is Toby Warburton. So Toby, could you come up, please? Toby's the Head of Active Quantitative Equities, Asia Pacific, for State Street Global Advisors. And Toby joined State Street in the London office in 2008, and before that he spent almost a dozen years himself working for Barclays Global Investors in London. Now Toby, we talked about this a little earlier, you might look at your own CVs and wonder why it is that you've reached this point of attending a function like this today with your own backgrounds. And Toby, I think, does the same thing, because he earned a first-class honours degree in physics from the University of Southampton and completed a PhD focusing on miniature laser devices within the Optoelectronics Research Centre at Southampton. He's also a chartered financial analyst. And finally, Jennifer Siric-Love. Jennifer works with Parametric. She's a Director of Responsible Investing with Parametric. Her work involves dealing with Parametric clients to design, develop and implement custom portfolio solutions with a particular focus on responsible investing, which is, of course, a matter of some considerable interest to many in this room who are, I said, looking around the room, many of whom are involved with our sister organisation, the Australian Council of Superannuation Investors. Jennifer, as you'll hear shortly, comes from far away across the Pacific. She earned her Masters of Business Administration in Finance from the University of Chicago, although she says that she's not part of the Chicago School of Economics. And she also has a Bachelor of Arts in Economics from Reed College. Jennifer's based in Portland, Oregon. That's right, Jennifer? In Seattle. Sorry. Of course, Reed is in Reed College is from Portland, Oregon, and Reed College is, of course, well known to you all because it was the place that Steve Jobs dropped out of, but Jennifer didn't. That's correct, isn't it? Okay. So, as I say, we're going to involve you all in asking questions of our speakers. I'm going to join our speakers over there in a minute. But my first question is going to be to Aidan. I'm wondering whether you might be able to explain, Aidan, the rise of populism that seems to have overtaken at least the Anglophone part of the world.
Sure. Big question. And Jared, I think you were commenting earlier that in 2016, three predictions that you made: Trump, Brexit, and Turnbull, and or at least the majority election result for Turnbull. Three crosses. So how do we?
Wrong.
How do we think about that? And when you have these eventualities come up, it's not as simple as obviously making a prediction and getting that right. There's always going to be a range of possible outcomes. And I think the question is, why were people so wrong about some of those results? And, we can't say that we predicted all three of those things. We're certainly watching particularly the first two of those very, very closely. But we did think there was a risk there that wasn't being appreciated, and that was around income inequality. And a lot of the models that are used to try and predict these outcomes sort of had one absent factor and one that's been particularly relevant today, and that is income inequality. You can measure this. If you look at the OECD countries and you look at measures of income inequality, the country that has the greatest disparity of income inequality is the US, followed by the UK. And we very much think that at the heart of that rising populism is income inequality. Italy's third, and we might get on to some of that discussion later. Australia's pretty close to the top of that list as well, sort of coming in around fourth or fifth on that list. And so some of that rising populism, some of that disenfranchisement with, that people are feeling is relevant here as well.
Okay. Let's come back to some of those questions a little later. Toby, we've heard about the Anglophone countries, in particular the United States and Britain and perhaps Australia. We certainly should come back to that a little later. But you might reflect a little from your own background on the Asian perspective. So where that part of the world that doesn't speak English, but in fact has got a majority other language as well. But what are we likely to expect from that quarter?
Yeah, I think actually it's a very different situation for a lot of the Asian countries. We have some elections coming up in Malaysia and Thailand over the course of next year, and the general expectation is actually we're not going to get a surprise, which is very much what we got with the US and Brexit. But I think there's less of that swelling of inequality. I forgot to say, I need to put my hand up, because a little over a year ago, I was very, very confident in my prediction. I was telling everyone I met that Brexit simply would not happen. I am British, so I know I was wrong, sorry. So what I'm saying is, you don't have to believe what I'm saying, but I'm going to give you a sort of flavour of what we're seeing in some of the Asian markets. Now, the most interesting in terms of what is happening in terms of policy and politics at the moment is obviously China. So China has been on a 2-year build-up to the National Party Congress that is happening in October this year. And a lot of what we're seeing in terms of Chinese policy has really stemmed from the fact that President Xi is trying to consolidate power at this Congress, and this is his opportunity to really build his legacy and his power base going forward. So as a result of that, we're seeing a lot of economic moves and manoeuvres to ensure that we don't get any surprises before October. So we've had sort of economic policy to encourage growth. So with the Chinese targets around 6.5% growth, and to get there, because things were starting to slow down, we've had some rounds of stimulus. Now, some of this has actually been stimulus by stealth. So it's opening the funding taps at the 3 policy banks. It's particularly at the local government level. So it's allowing local governments to issue debt to invest in construction. It's encouraging public-private partnerships. And it's allowing the local governments also to use the money they're getting from land sales and to deploy that locally. And a lot of this has resulted in a stimulus of the Chinese economy, which is getting back up towards the 6.5% growth that President Xi needs to show economic stability and consolidate his power. Now, actually, this has had a lot of repercussions outside of China, and we see a lot of this actually in commodity prices. I'm sure we all know what's happened over the past year and a half in terms of commodities. So beginning of last year, we had iron ore that had continued its slide down to around $40. And then as these taps started to open, then we got these huge upswing in terms of commodity prices. We had iron ore going from 40 to 90 towards the end of last year, beginning of this year, really as a result of this policy. Now what's interesting is we're getting to a more stable phase, as you were, whereas they're starting to scale back the stimulus to regulate a little bit more because they don't want to overheat the economy. So really at a sort of stable state where now they're just running into the October National Party Congress. And as a result of that, we've seen things like iron ore back down to around 56 from the 90. So, you know, our expectation there, which is obviously the biggest economy in the region, is that we're sort of in a nice stable state now. The big question marks that we can talk about later is actually what's going to happen post-October and you know, after that party congress.
Okay. Well, Jennifer, we've become aware that as a result of the Trump administration or the election of the Trump administration, that there are a range of stresses that are both obvious and some of them that are less obvious on international protocols. And one of them, of course, is the attitude of the current administration in the US to the environment and the whole abnegation of the Paris Agreement. So I wonder whether you might be able to shine a bit of a light on the world of environmental and social and governance issues that you think that these rather odd outcomes, both Brexit and also the rise of Trump, and perhaps even since you're a visitor to Australia and you've been here for
2 days.
2 days, you'd be an expert then in how it might play out in a third country. But over to you on ESG matters.
Yeah, absolutely. So I think there's, you know, absolutely, it's interesting to see investors begin to think about, you know, their ownership in corporations as another avenue to think about trying to get to the kind of outcomes they'd like to see that might not be coming about from the government. So, you know, some of you might be aware that there was just recently a vote on a shareholder proposal at ExxonMobil with regard to climate change. And, you know, certainly it was quite striking that it received 62% support, which is a remarkable thing in and of itself. It was especially remarkable given that the exact same proposal achieved, you could say, only 38% support the year prior. Frankly, 38% is actually still a remarkable number as well. But then to boot, that was especially poignant because I believe that vote came about, you know, in the same week that Trump declared that it was going to withdraw from the Paris Agreement. So, you know, there's sort of this lack of progress it makes it even more important to engage in the kind of activity that investors were already doing. You know, I obviously really think about shareholder proposals in the US. It's a very vibrant realm, and you're seeing the number of proposals come up for vote and levels of shareholder support starting to build and to really turn. And, you know, that really sort of intersects with these other forces with regard to, you know, are you just checking the box on executive compensation? What kind of boards are running these companies? I think that you're really seeing a shift in a way that I haven't seen, at least in the US. We had, you know, the creation of the first U.S. stewardship, you know, code. There's just really seems to be a shift that you could say is in reaction to these kind of unexpected political events, or maybe an extension of the same kind of sentiment. But certainly the sense that, you know, investors play an important role. The corporations that they're investing in have, you know, important impact on the communities and the environment, and that there's just a normalization around discussing these issues and considering them that feels newer to me.
Okay. Just staying with that for a moment, is corporate America either emboldened, do you think, with the rise of Trump, or are they in a position of some ambiguity, recognising that the Republican Party is really not in the same kind of position of power as it might have been had it been a different sort of a person elected as president? So are they more emboldened, or are they more confused about where they might resist or react to this kind of rise of the shareholder.
Yeah, I feel like I've seen, instances maybe of each. But something that strikes me, for example, is, again, just back to the Paris Agreement, there was an open letter signed by investors and by corporations and by all manner of entities saying that they were very much with the Paris Agreement. And when you look at the list, it really was a diverse range. I mean, and you even have, energy companies saying that they stand with the Paris Agreement. They might have different reasons for actually stating that. But I'm not necessarily seeing that there's a boldness to sort of reject these things on behalf of corporate America, out of the sense that there's a normalization of, for example, not being mindful of the environment. So I don't think there's widespread evidence of that.
Mm-hmm. Okay, remember we're looking for questions from the floor, but so prepare your questions. I might just return to something that Aidan said a little while ago on the question of income inequality. I must say it's probably a surprise to this audience to realise that after the United States and the UK, perhaps it's not such a surprise that Italy might be the next one, but that Australia is in the top 4 or 5. They haven't been reading their Thomas Piketty if they didn't think that, but nevertheless. Last night, if any of you were up late, you may have waited for Q&A on the ABC, and I don't know whether you got to near the end of it, but there was a rather impassioned exchange between a person from the audience who was a teacher and whose partner worked on the weekend and therefore was working for I assumed it was a Bunnings-style operation, and was anticipating having their wages cut, their household wages cut, and meanwhile politicians had just received a 2% pay increase courtesy of the Remuneration Tribunal, and also simultaneously a tax cut benefit. So it was quite an interesting exchange, and it was a quite emotional exchange. Is that what you mean by it's potentially an issue that could play out in Australia?
I guess that's an example of it. And the way we try and analyse sort of what's at the heart of income inequality, because income inequality is sort of the outcome and where we've ended up. Probably more instructive to look at what may be driving that. And when we think about these issues, we think about sort of, those undercurrents of, very long-term economic drivers being demographics, globalisation and technology. And, you've referenced Australia, perhaps just going back to sort of Trump and the example there. Globalisation is very much being targeted, and the fear around restrictive trade policy as the solution to income inequality, and certainly that's something that we think has been misdiagnosed. If you attribute job losses in manufacturing to those factors, technology and not globalisation by far and away has resulted in the majority of those job losses. Globalisation plays a part, and there's certain industries where it feels very visceral, that impact of globalisation, and so it's been a target. But to then enact policy on that basis, we think is probably the wrong approach, given technology is sort of one of those underlying drivers, and you could look at Australia through that lens as well, and there's shifts that are underway, whether it's demographics, whether it's the impact of a combination of technology and globalisation on industry here, what the implications are of those things for government revenues, and through that lens you can sort of start to see, well, that can have implications, and we're seeing that manifest itself.
How do you think that could play out in terms of the politics in Australia? Because we have a relatively closed political system. In the US, you have the presidential elections where anyone can put their hand up effectively. Well, anyone that's got a few billion in their pocket, but sort of anyone can put their hand up. And so it's easier to get something like a Trump figure in that can then disrupt things. We have this largely two-party, fairly closed system. Is there a way that you can actually, this inequality will come out and actually be represented in terms of the actual policies of one of these big parties, or do do you have a view on how things could change?
Yeah, political commentary is not really a strength of mine.
Sorry,
I would
not
love to hear Jared's answer to this, but you know,
I was so right earlier in the year.
along those lines, I mean, here, you know, could we see that Trump-type scenario? It feels like more a political stalemate rather than, you know, something like what we've seen in the US, I think.
Although, Aidan, a less political question may well be that we really do have, if you like, 3 or 4 clusters. You've got obviously the Labor Party, and the question really would be, would these circumstances that you're outlining be more advantageous to a potential incoming Labor administration? Or you've got clearly a split Conservative Party here where is this likely to benefit the kind of the Abbott forces that are kind of the Conservatives on the Conservative side of politics, or the more liberals that Malcolm Turnbull represents? So that's the kind of, you know, perhaps channeling your question, Toby, is that where is that likely to play out in a period of a couple of years, given that we've been so good at predicting so far?
Yeah, feel free.
Actually, can I just
Yeah,
comment
you
on
do,
that?
yeah,
So,
yeah.
as I sort of rather to the board, Aidan, I'm going to try and answer that one. I mean, I think it partly depends on, you know, what stance the political parties take. And I'm going to do the analogy of the UK and the recent UK election. So in the previous election, you know, the Conservative Party won fairly easily. The new leader of the Labour Party, Jeremy Corbyn, was basically thought of as being totally unelectable. And then we went through Brexit, and the Conservative Party had the stance of being very hard on that, wanting a hard Brexit. And the Labour Party, for their credit, obviously realised if they took the opposing position on that, and they were very much wanting a soft Brexit, keeping as much close ties to the European Union as they could. They also softened it with some comments about sort of being, you know, loosening the austerity measures. And what you saw then is this huge swing in politics, particularly from the youth and the disaffected youth in the UK, going to what was effectively an almost unelectable opposition party. And you know, as we saw, then it ended up with a swung parliament. So, you know, in some ways, if one of the parties or party groups here actually really wants to take hold of this and run with it, then you could see this sort of swings, you know, here, arguably, as you could do in the UK.
Though the argument often is that you have got a small party in Australia that's doing that, which is in the form of One Nation, but the constraints that you mentioned a little earlier, which operate in the Australian system of having a small party elected as the government is so great as to be an unlikely outcome. Could I? I'm keeping an eye out for questions from the audience, so I'm still happy to keep asking questions, but I'm eager to get questions from yourselves. But just here's perhaps one for the whole panel. Jennifer, you might kick this one off. Trump is not going to be able to deliver anything like the kind of promises that he theoretically made, is he? And in which case, what does that look like? Is he going to not be re-elected in 3.5 years' time? Is he going to be shot? Is he potentially going to die? He's even older than I am, so he's getting closer and closer to that. And so he'll die in office. Or is he likely to, with his attention span being what it is he likely to get bored with this or find that he's just incapable of proceeding, so that we won't be dealing with someone like Trump? And in the case of Brexit, which is the other kind of headline topic that we're talking about today, it's not really going to happen, is it? Our two colleagues at the end, isn't it possible that Brexit simply won't happen, that it's too complicated, that eventually the Brits will do what they should have always done and went to a second referendum, since they're not very referendum conscious, and realised that they'd made a mistake? So, Trump first.
Shall I start? This whole conversation makes me very glad I'm not in the prediction business. So I'm happily standing aside from that usually. But I will just go out a little bit on a limb just because I do live in the midst of it. So this is not the official parametric position, but me gambling a little bit here. I mean, I would just say living in the midst of it, I mean, I'm not putting high odds on impeachment. I think there is sort of an unappreciated and somewhat challenging level of support for a lot of what he's doing. And then it sort of reminds me of the idea that, you know, the best cure for low commodity prices is low commodity prices. Maybe the best cure for the sort of the impulse that put Trump in office is Trump himself in office. And people simply have to live through it. I think what we're all hoping for is to see if those checks and balances that we ostensibly have in our system do work. That's the idea here, and I'll really put it to the test. You know, but really, you know, certainly, you know, when it comes to investing in the way that we position any of it is to sort of just, you know, focus on what you can control, what you can deal with, and you know, not let yourself be too exposed to the uncontrollable and the unpredictable.
Okay.
Can I, sorry, I just like to butt in now.
Yeah, go right ahead.
So I have my alternative view on Trump, and again, this is not a State Street view on Trump, but it's my own. So I predicted Brexit. No Brexit. Sorry. You know, I've always thought that actually Trump could end up being one of the luckiest politicians ever. So he's got into the US at a time when the US economy is actually improving. There has been a groundswell of actual improvements in terms of, you know, some GDP growth, company earnings growth, you know, sort of the wealth generating effect. It's probably below par, but it's starting to improve. So if he could just do nothing for 4 years, and he just spent his time sending tweets and not really doing anything, which could well be what happens with all the impasse in terms of the Senate and the House. Then at the end of that 4 years, the economy would have improved much, and we all know the Clinton's era saying it's the economy stupid. Everyone would think he's been the greatest president ever, and he's in for another 4 years. But that does depend on him not actually doing anything.
So that's a little bit like Ronald Reagan sort of arriving in 1980 at the right time.
Yeah.
A bit like
Yeah.
that. Okay.
Can I ask a question?
Yeah, sure, of course. Yes.
I'm listening to
Just wait for it. It's probably useful also to identify.
Sinclair Schofield from State Street.
Yeah.
I'm you know, as perplexed as everyone else with what we've watched in the last year or so, but I happen to be a US voter, a British voter, and an Australian voter. And
So it's your fault.
I take my civic duty very seriously, and I vote in all elections. But having pretty close access to people in various parts of Britain and a very Republican part of the United States, it seems to me that we in cities we might just have this wrong. And coming back to the income inequality thing, that is a massive problem. That it's a massive groundswell of support. So my question would be, what if anything is the investment community doing to think about the tilt away from the Anglosphere and the fact that actually the majority of GDP in about 15, 20 years from now is going to be coming from India, China and other countries. And as we continue to have these debates about what the West should be doing, you know, the other countries of the world are taking off and actually growing their economies, and they're the more interesting investment opportunities in the next, you know, 10, 15, 20 years.
Good challenge, Sinclair. Toby.
And I think a part of that, I mean, it's a really good point, is a huge part of that is being driven out of China. And they've got their One Belt, One Road policy, which is effectively building the new Silk Road, so huge transportation and infrastructure link between the wealth on the eastern seaboard of China all the way through sort of Pakistan, through parts of the Middle East, into Europe. And doing that on a sort of road infrastructure link. They've also got their new maritime link that is sort of going around the seaboard. And this is a huge project. Now, China have already got committed, I think it's something like $1 trillion of projects set up in that. And in terms of, you know, investors and what investors can do, there are massive opportunities, you know, throughout all of this in terms of infrastructure, finance. You know, these projects which need to be financed somehow, so that a lot of the international banks can be financing those. There's infrastructure, there's manufacturing, there's engineering, and this could bring a sort of huge wealth effect to the whole of the Asian region. And it's very deliberate why China's done that, and part of that is political. It's just sort of show their place in the new global order. But a lot of it also is exactly to your point that China is very wealthy on the eastern seaboard, but the huge swathes of the west, which are largely agricultural, are very poor, and they've seen a lot of migration from that into the cities. And by building this sort of infrastructure, actually they're building wealth back out through the whole of China and trying to spread that around. And I think that's a great example, and I think as investors that can support that and governments that can support that actually could benefit.
And I think, Sinclair, on that point, and certainly for people in this room, everyone's going to have a different view as to how quickly to progress into those markets. I think our view would be that investors should absolutely be watching. We've just seen MSCI dip their toe into the water with a China A-share inclusion for the first time, and they wouldn't do that unless they had some confidence that those markets were opening up and there are appropriate channels to be able to trade there. Whether that's an opportunity for investors now or whether it's down the track. I mean, China A-shares at the moment, it's about 80% sort of retail investors, and the average premium where they're dual listed is about 35%, A-share trading at a premium to H-share. So there's clearly some big disconnects there. So whether the opportunity is now is probably questionable, but those markets are opening up. At a full inclusion, China A-shares today would be 14% of MSCI emerging markets. So certainly something to watch out for.
There's a question over here.
Thanks. It's Duncan Patterson from CARE. I'm not sure if Jennifer's aware just how much interest there's been in the Trump election in Australia. I mean, the national news feeds have had a story every single day for the last year about his campaign and his election. It's hugely interesting and in many ways hugely dismaying when you look at the actual when you look at what it's saying about the state of the democracy in the US. The letters of support for the Paris Agreement from corporations in the US remind me a little bit about the celebrity endorsements that Hillary Clinton received. They were very nice to have, but in the end not particularly effective. What I find interesting, and this goes to the question of income inequality, if the cause of all this kerfuffle we've seen in the US and the UK was purely income inequality, then you'd imagine that there'd be a reasonably even distribution of response between left and right in the political spectrum, and there simply hasn't been. Arguably, the left has been completely caught flat in their feet on this. I suspect it's more to do with evolutions in the way information is generated and flowing. The use of social media as a platform for distributing news, the ability for social media bubbles to influence people so that they have self-reinforcing messages. I think that's a far greater cause, and there's a degree of agency there, certainly from some large media companies, and an Australian whom we're all familiar with, who's quite active in media internationally, seems to be having his political opinions reflected more broadly than ever before. I wonder if there's a role for investors to engage more heavily with social media providers about the degree of transparency and the degree of openness around media being used in the social media sphere. And I'm also very interested to hear from Gerard on the work of the New Daily and whether or not the superannuation industry, which amongst all industries has to be looking a lot further into the future and arguably, as a result, must be slightly more progressive in some of its attitudes. The role that the superannuation industry has in combating some of this arch-conservative messaging that's getting out ubiquitously, it seems.
Yeah, so dense questions there. Maybe the more specific question just around social media companies and sort of what investors can do. Again, I just keep going back to the shareholder proposals that do come up is one way to sort of keep abreast of these things. So you certainly did have proposals that came up that target around the idea of fake news. Again, there's only so much, at the very least, a proposal is a way of signaling interest and concern. Probably, there's other effective ways to be having conversations with companies as well. But, you certainly do see investors wrestling with, what with what mechanisms they do have available to them, they are surfacing some of these issues as well. So you did see some proposals around that. You know, I think that, you know, there is only so much that you really can influence, and sort of how you get companies to prioritize, and, you know, is that really going to be an effective way to get them to change is questionable. But at the very least, there is a signaling aspect to being able to highlight these issues with companies, and hopefully maybe have some conversations with them behind the scenes as well, I think.
I'm going to take a question from that table there and then table 3. Just in response, however, in relation to what sounded like a Dorothy Dixer in relation to the New Daily, but not quite. Some in this room would be aware that the New Daily is an internet-based publication that a number of superannuation funds have underwritten to get up and running. It's actually doing pretty well, I must say. There's about 2 million subscribers, or 2 million viewers of that website, so it's put it into the top 10 or close to the top 10 of. But the point of is what does it contain? What, you know, why is it there? It started off being a little cautious in the way it reported general news and didn't want to be too didactic or hectoring about its own origins, if you like, even though the other media organisations don't seem to be so cautious there. But slowly but surely we've been able to bring some of the political edge and analytical edge in relation to superannuation issues, and including issues to do with equality, income equality, environmental impact of the way companies operate, more and more to the fore, while continuing to produce a daily news feed. Having been a journalist in my own working life, one of the things that you realise about newspapers, as they were in the old days, in my case the Financial Review and the Sydney Morning Herald, was that they, of course, change rapidly every single day, every single hour really, so that they're not always the same thing each time. But you in this room know, if you pick up the Sydney Morning Herald or the Australian or the Financial Review, that you're going to get a certain flavour of coverage, and you expect that, but you also expect to be surprised as well to be shaken out of your complacency. And so we're trying to get that juggle right. On that table? No,
Trevor Carr, First State Super. Just wanted to bring it back to our own region for a moment on India and China, and in particular get the view of the panellists regarding the responsible investing opportunities, but investments in general. In China, we've got a collapsing labour force availability over the next 10 years that's going to need to be addressed in some way for their continuing growth to be underpinned. And of course, we've got the geopolitical issues regarding military mines and in the sand or in the Coral Sea or in whichever sea they're building islands in. And India, we've got terrific microeconomic reforms going on that have led to 100 million new bank accounts being opened in the last 12 months because of dual biometric recognition. So it's sort of starting to cut out some of the corruption and the middleman. And both countries about 1.3 billion people. India 5.8% GDP growth. China, who knows, but claiming north of 6. How do you see that playing out in the next decade in terms of the capability of each of those countries and, I guess from an investment point of view, the opportunities for us as superannuation institutional investors?
There's some silence on the panel, so I'm going to talk. I think, I don't want to talk too much about the governance issues, particularly in China. I mean, we know that is a problem, and it's not a problem that's necessarily going to be solved immediately. One thing I will say is that, this Congress that I was talking about before is actually incredibly important from that point of view as well, in that, Xi needs to consolidate power, and to achieve that at the party conference in October. Because after that period, there's a lot of other work they need to do. They need to effectively create a big structural reform process, because they can't carry on growing at 6.5% because they sort of mandated it. I mean, it's okay in a command economy. They can force growth at whatever level they want to a certain extent, but you're building up a huge level of debt. So at some point they have to address the debt issue and the structural reform issues. And that's what's really reliant on what's happening in October, because he needs a strong mandate to do that. So it's very hard to see what's actually going to happen over the next decade, but my personal expectation is obviously that he will achieve that consolidation of power, because the whole party and country has been leading up to that over the past few years. But then it's a question of whether he's going to tackle the debt first or the structural reforms, and that's a very open question. India, I don't know much about, to be honest. I mean, it's not an area we directly invest in, but it has been going through this reform process. I mean, Modi's made a big difference, and actually it's obviously planning to carry out the reforms. It's gone through the demonetisation, which has actually helped, and then led to the increase in the bank accounts you talk about. So, I mean, that is likely to be a continuing improvement in terms of the structure and the governance. But India is still incredibly overrun in red tape and sort of official governments and entities, and to change that over time is going to take a very long time. So I think if you're looking at a decade or so down the line, these two can be sort of there will be much bigger components of the global economy, but I don't think it's going to be a necessarily smooth path together.
I paused initially because my first thoughts around this actually are less to do with responsible investing and more just in terms of the way we frame our own emerging market strategy at Parametric. So I thought I'd just mention that quickly before Aidan comments. And our research has really shown that when you think about the country returns in emerging markets, that they're somewhat distinct from what you might see in developed markets in terms of the country allocation being really important return driver. The implication being, to be really mindful about the kind of concentrations that you might be getting in your emerging markets portfolio, and focusing in terms of getting that country allocation right. So be careful about putting all your eggs in one basket in any one country. Absolutely, related, and I think this came up. We do see emerging markets, a very important part of an overall diversified investor portfolio. But within that allocation to emerging markets, being careful about the kind of concentrations that can build up, the kind of reversals you see in country fortunes year to year. Last year's massive losers become, next year's massive winners, and so it's that diversification and rebalancing back to, a sort of a disciplined, diversified approach that we feel is really beneficial. So just had to throw that in. It's not related to responsible investing, but that's the way we think about emerging markets.
Ed.
I was just going to comment very briefly on that one as well, and certainly when we think about investors getting access to diversified global market cap exposure, we don't mean developed markets. We sort of think about that in its broadest form, so long as you can get access to that efficiently. And one of the reasons why we believe in that, and I think you touched on it, the themes you mentioned are very long-term themes in nature, and you can get all of those themes right from an economic standpoint, but but then you could get the investment view wrong as well. And for us, it's about being exposed to those themes, and very much echo Jennifer's comments in a diversified way, because the investment case doesn't necessarily follow the economic case. And we saw that with market reaction around Trump. I don't think anyone expected that either.
Table 3, there's a question.
Hi, Louise Bradshaw, Eaton Vance. I guess one of the undercurrents of these election outcomes has been isolationism. And my very quick question is, does isolationist policy lead to reduced capital flows? And what's your thoughts on that?
Do you mean from both the UK and the US?
And potentially beyond.
Okay. Who wants to take that on?
Again, happy to tackle that one briefly. When we sort of talked about, I think the policies in response to that diagnosis that globalisation is at heart. That's sort of that inference in terms of going more isolationist. I think, absolutely long term, that's something that would be a negative for the economy and markets, and in part again because we don't think that's the right diagnosis for the issue that's at hand. I think that's the case whether it's the US or the UK.
Mark Lennon from First State Super. First of all, can I congratulate Sinclair? I've met people who voted 3 times in the same election, but I've never met anyone who can vote in 3 different countries. Secondly, if I got an answer first and then a question, Toby, an answer, I think, to your question about how the protest vote manifests itself politically in Australia. It's clearly in our Senate with a proportional representation system. And we saw last week here that our government had to stitch together 10 crossbenchers to get legislation on education through. If you want to know about the 10 crossbenchers, you've got to spare 3 hours after this. I'll take you through them. They're an interesting bunch of characters. My question is to Jennifer, though. Jennifer, just in relation to opportunities for renewable energy investing in the US, given that nothing's happening at a national level, we understand or are led to believe there's a lot happening, possibilities at state and city level. Are you able to expand on that?
Yeah, it's somewhat. You know, we work mostly in public equities, which actually, frankly, there's probably much more limited opportunity. In the public equity space, maybe it's something happening at utilities or industrials or, IT companies. So a lot of the more interesting opportunities would fall outside of that in, venture capital, private equity, and debt kind of opportunities. So I have less direct insight into that. Really, we're sort of counseling investors, frankly, that if that's really what they care about, they need to be seeking out those opportunities. I think, so I unfortunately have more limited experience in terms of what those would actually be.
We're back to table 3.
The leading table. Rob Dougal for Mind, Wealth and Wellbeing. Just in relation to Trump and Brexit, there's things going on quite a lot through both those 2 issues at the moment, but global volatility is remarkably low, and it just seems to be all ignored. So I just wanted to get the panel's view on why we aren't getting more volatility in equities and why the equities just seem to normalise and just want to continue to go up.
Great question. I'm sure Toby's got a response on the volatility aspect as well, given your focus. There's been a disconnect since the Trump election result, and that is, business optimism went to all-time highs, and political uncertainty also went to all-time highs, and those 2 things shouldn't really reconcile. One of those has to win out, and I think what we've been watching very closely is, which one of those is going to prove to be right, and we see that through market volatility. Volatility's been incredibly low, even though people are really concerned about some of these political events that have taken place. Looking at 2 recent, I think, data points in terms of how are those things working their way through. You had markets rally quite a lot. You had the expectation for inflation with a lot of the optimism around Trump getting some of those policies through. We've actually seen some of that wind back now, and I think bond yields have now come back down to pretty low levels. Oil is off as well. I think that's probably an indication that some of that business optimism is starting to come out, and potentially some of that political uncertainty is coming to the fore. We haven't really seen it come out in equity market volatility as yet. But.
Yeah, I agree with what Aidan said, and I think it is in some ways a little bit perplexing. And it's not just in equity markets, also in the bond markets. You think of the VIX, we all know of, being down below 10 again yesterday. The MOVE index, which is sort of a bond version of that, has also been hitting all-time lows. So it's really across asset classes. Now, part of this, I think, is because these are sort of hiding what's happening underneath. So we've had actually huge moves in equity markets, and there've been huge sways. So within the markets. If you look at what happened over the course of last year, we had from the end of July, the start of the reflation trade in equity markets in the US and here and globally. And then you had the rotation within those where the interest rate sensitive type stocks, the REITs, utilities were selling off, the more cyclical names were starting to do very well. And that really flipped in the beginning of this year, and then we had the swing trades again when people started to realise that Trump wasn't able to enact all the things he said he would. It was the Healthcare Act that really sort of triggered that, the failure to get that through. And again, then you've got a more reversion, as you're saying, to more normal policy. So we've had big moves within the equity markets, but overall there has been this upward trend. Now, why is that? And I think part of that is that people are expecting that we are now in an era where the global economy is improving. It's not as fast as what it was last year. And in that sort of environment, it's hard to know where to invest because as you get sort of general improvements, you're going to get interest rate rises. You don't want to be in traditional other liquid asset class, which is high quality government bonds, because those are the ones that are like to suffer. So basically people have stayed invested in the equity market because that will benefit over the long term from this retracement trade and protect you a little bit from the possible capital losses. So I think people are more hanging on to equities because there aren't a lot of other options, and a lot of asset classes that would be traditional alternatives are now looking expensive. Things like infrastructure, which is a lot more expensive than it was because of the flows that have gone into that over the past few years.
Toby, I noticed yesterday there was an issuance of an Argentinian 100-year bond. So if you want some stability, there's anticipation of a lot of stability.
But I think it pays off in 30 years, actually. You get your money back, so it's worth it.
A question over on table 7.
Hi, Chris Warren from Media Super. You talked very early at the beginning about the rise of populism, but of course it's a particular type of populism because it's an authoritarian populism, in many cases motivated by racism and sectarianism. Toby, I thought you were a bit sanguine about the situation in our own region, in that when we've got what's happening in the Philippines, the governor's election in Jakarta. And I wonder, do you consider those kind of things, with the ongoing authoritarian struggle in both Thailand and Malaysia, are those parts of a birthing pangs of a more investment-friendly area, or are they, as it is in other places, a bit of a pushback against globalisation and investment opportunities?
I mean, I think it's a bit of both, and I think in some ways, these are just demonstrating the risks of investing in more emerging markets. So if you look back a few years, we had the Arab Spring, where the expectation was that actually this is a complete change within some of the Middle Eastern countries and an overthrow of the authoritarianism, dictatorships to a certain extent. And that worked in some places. Obviously, Syria is a prime example of where that simply hasn't worked. So I think this is around the world. This is a global phenomenon, and it's been going on for quite a few years. I think particularly within our region, I wasn't meaning to downplay these undercurrents that are there, but I think it's unlikely to be as huge a sea change as somewhere like the US, which has been on a very steady status quo-driven path for a very long term. And having someone like Trump in is actually a much more radical change. I think in places like the Philippines, Thailand to a certain extent, there has been more sea change over time, and the upcoming elections could just swing things around again, but it isn't going to be something totally new to a certain extent.
Yeah, so it's Chris Bryant from Parametric. I guess it's probably more of a comment than a question, in that there's been a lot of talk about who are these people in the country that are thinking, so this whole city-country divide. And I guess I would just say from my personal experience, so my parents are in the country, my brother's in the country. I recently had to get onto Facebook to go to a school reunion, and a couple of my parents' friends friended me, then my sister-in-law friended me, and then I got to really discover what people in the country think. Because these views, like the views that I was hearing, we must stop all importing, we must only buy Australian, we must only export, different races are the source of all of our problem, we must stop immigration. It's amazing what you find out what people are prepared to say on social media that they wouldn't say otherwise. So maybe just a comment.
Yeah, I'll take that as a comment. That's fine. I wonder whether, Jennifer, however, you might like to just briefly reflect on the city-country divide that you referred to, just from your own experience.
Yeah, certainly, and I actually have a similar experience. I come from very, very rural America and have chosen intentionally to live in not rural America. So I feel like I grew up in Trump country in a Sanders household. So I'm well acquainted with the divide. So I think that it absolutely is a difficult thing to bridge that divide, and you do see evidence that people are really self-selecting into certain areas. It makes it you know, and it's hard to argue against that, but on the other hand, there really isn't that free flow of information, and it is really sort of astonishing when you start to have a conversation. It can be a painful thing, and sometimes, you know, easier to just stay in your own sort of comfort zone. So, you know, I think it's one of the things where we'd like to bridge, but then the reality of it can be, you know, just going against how you might, you know, like to congregate and the kind of people you like to spend time with. It certainly does exacerbate sort of a lack of understanding of, you know, what exactly the concerns are on both sides of an issue.
Yeah. I'm wondering whether I might put just a general question to each of our speakers and their ability to forecast, even though each of them say they're no good at forecasting and in some cases have been hopeless at it in the past. So here's my question on Brexit to each of the three members. In 3 years' time, will Great Britain be Little Britain or smaller Britain, or is it unlikely that Brexit will actually go ahead? Is the first question. The second is my earlier reference to, do you think that Trump will be either a 4-term, an 8-term, or a 12-year term president? I know you say that there's a requirement that presidents only sit for lots of 4-year terms, but clearly if you're Donald Trump and you've already made 8 years, you clearly changed the constitution to give yourself another 3. So is that possible? And the third question is, what do you think the Australian dollar versus the US dollar is likely to be in June of 2018? What's the ratio there? And so, Aidan.
If anyone actually acts on my answers to these, then you're probably making a big mistake. In relation to Brexit, I think it's more likely to be Little Britain than Great Britain, but I think the latest election result means the bargaining power has reduced, and so maybe it's a smaller Britain than what it would have been pre the recent election even. Trump, I'm just going to throw it out there and say a single term. It's probably the optimist in me, and on the Aussie dollar, all the information that's out there at the moment is sort of factored into it, so I'll say around 76 cents.
Toby.
First of all, I'd like to say that, you know, I do think I'm good at forecasting. I'm just really bad at getting the right answer. So here are my forecasts. Brexit, I think it's going to happen, but I think it's going to be a softer version. I think there's going to be some movement, better movement of people. I think it's going to be a more gentle Brexit, but I do think we are going to be out of the European Union in some form or other. Trump, well, despite my prediction that if he did nothing, he would have 2 terms, I don't think he can do nothing, so he'll have 1 term. And yeah, I kind of agree with Aidan. I mean, our currency people think the Aussie dollar is a round fair value against the US dollar. I sort of agree because I can't predict. But I'm going to be different, and I'm going to say 75 cents.
A dollar versus US dollar might not be your specialty, so why don't you make it a dollar against the euro? Sorry, the US dollar against the euro. Sorry.
Well, I'm going to remain staunchly prediction-free in that, you know, I think the really important thing to focus on for investors is, you know, we can be, you know, sort of amazed at 2016 and the things that we're discussing here, but really, I mean, is that any difference? I mean, we can look over the course of history and see all manner of unpredictable coming true and the black swans and whatnot. So, you know, the focus is, you know, are there things that you can do in your portfolio, set yourself up for success, no matter what any of these outcomes could be, is really what we want to drive home. You know, at the more general level, you know, are you getting the kind of efficiency and implementation, minimizing your cash if, you know, interest rates are really low, thinking about your tax sensitivity, for exchange costs, and then with regard to responsible investing, if these are issues that you care about, if there's things that are happening in corporations that you aren't feel are being properly addressed by governments, is there a role or an avenue within owning these corporations that you can sort of seek to see the world that you want and the outcomes that you want? So I'm going to disappoint on that, really focus on how can you set yourself up for success regardless of what the future may hold.
Okay, nicely sidestepped. Okay. Thank you for that. I might invite Eva Shearling back to the podium.
Thanks, Jared, and thank you very much to our panel. Could you please join me in thanking Jennifer, Aidan, Toby and Jared? So I think income inequality has been a bit of a focus today, and we've also pulled it back from the US and the UK and Europe back to our own region. I find, however, that Trump being a case study in testing the democratic framework and protections that exist in the US, and his presidency is something to be endured, is a pretty high price for people in America and the rest of the world to have to pay, but so be it, I guess. Anyway, thank you all very much for joining us today. I hope that you found the insights from our panellists interesting, that you took something away from it, and we hope to see you at our next event.